All right, let's get right into it. If you think the story of crypto in 2025 is still just about charts going up and down, you are missing the real story. The whole landscape has grown up, the rules are changing fast, and we're going to break down what's actually happening under the hood. And that's the big question, right? Because with Wall Street money flooding in, brand new tech, and investors changing their entire strategy, it's a completely new game. So let's get you up to speed. Okay, first up, let's talk about the one thing everyone loves to debate, the market itself. It is sending some seriously mixed signals right now, especially around all that altcoin season talk. Ah, yes, the phrase you hear every single time Bitcoin even thinks about taking a breather. Traders have been calling for it since the middle of 2024, but this time, they might actually have a point. The only problem is, the evidence is pointing in two totally different directions at once. And this is what's so interesting, the contradiction. So on one side, you've got the bull case. Bitcoin's dominance, its slice of the total crypto market pie, is slipping. And historically, that's a sign that money is about to start flowing into other coins, into the altcoins. But then on the other side, a major player like Solana takes a 15% dive right after hitting a huge high. So which signal do you even trust? Well, if we zoom out from the pro traders and just look at public interest, the story gets a little clearer. Google searches for altcoin are spiking globally, hitting levels we haven't seen since late 2024. And get this, in the US, interest is at a 7-year high. Backing this all up is the king of the alts, Ether, sitting up over 60% in the last year. That kind of performance is often the canary in the coal mine for a much bigger market shift. And the experts are definitely noticing. As Martin Berger from Sygnum Bank puts it, we could be at this really crucial turning point. This isn't just random noise, it's a potential shift. But price is only half the story. The tech being built right now is where things get even more interesting. So let's see how all this market chatter is translating into actual products. In part 2, we're looking at the tech. Because let's be honest, progress in crypto is never a straight line. We've seen some big wins and some equally big faceplants. First up, the Solana Seeker phone. This was supposed to be the successor to the surprise hit Solana Saga, the device that would finally put crypto in our pockets for real. About 150,000 people have one now, and the reviews are, well, they're complicated. It's like it has two completely different personalities. As just a regular smartphone, it's kind of a dud. Reviewers are saying it's slow, and the camera doesn't even come close to what you'd get from an iPhone or a Samsung. But as a crypto phone, that's where it shines. The built-in seed vault for keeping your assets safe is a genuine game changer. But here is the multi-million-dollar question. The original Saga phone blew up because of all the juicy airdrops that came with it. So far, the Seeker doesn't have that. The cool tech is there, for sure. But without those incentives to get people on board, you have to wonder if anyone's going to show up. And speaking of tech disappointments, we have to talk about the elephant in the room, GPT-5. Sam Altman hyped this thing up as a massive leap forward, but when it finally dropped, it was met with a huge wave of criticism. The New Yorker even said it might be a sign that AI progress itself has just stalled out, and you can literally see the market's reaction right here. On Polymarket, a prediction market, the odds of OpenAI having the best model just absolutely cratered after the release. It went from a super confident 75% all the way down to just 8%. It just goes to show you, in both AI and crypto, just shipping a product isn't enough anymore. It actually has to deliver. So, if the market's all over the place and the tech is a mixed bag, where is the real innovation happening? Well, that brings us to part 3, where the very definition of a digital asset is starting to expand in some pretty wild ways. So forget about coins for a minute and think about this: digital real estate. And I'm not talking about some metaverse plot. I'm talking about the original, foundational domain names of an entire industry, valued not just for traffic, but for their actual history. A perfect example of this is happening right now. A portfolio of over 280 Bitcoin-related domains, all registered way back in 2010, before most of us had even heard of Bitcoin, is up for auction. I mean, just think about that. These are the digital bedrock of the entire ecosystem, with URLs for wallets and exchanges and payments. This isn't just about nostalgia, it's about who gets to own a piece of internet history. Okay, now let's switch gears to another kind of asset. I just want you to look at this number for a second. $300 million. Now, what's so important here is that this isn't the valuation of some new meme coin.
No, this is the amount of real-world assets that Wall Street vet Anthony Scaramucci's firm, Skybridge Capital, is putting onto the Avalanche network. In one move, they're basically doubling Avalanche's entire base of tokenized assets. This isn't some little experiment. This is a massive signal that the race to bring real stuff on-chain is on. And that move, from digital history to real-world assets, brings us perfectly to our last section. We've looked at the market signals, the tech, the new kinds of assets, so now let's put it all together and just follow the money. Where are people actually placing their bets in 2025? Just take a look at this. This chart shows a huge trend happening with everyday investors in South Korea. They are actively selling their big tech stocks. We're talking names like Tesla and Apple, and they are rotating that money directly into crypto and stocks for companies that hold Ethereum.
And just to be crystal clear, this is not a small trickle. We're talking about a net sale of over $720 million worth of Tesla stock in 1 month. This is a deliberate major capital rotation from one of the most tech-savvy investor groups in the world. And it really makes you wonder, with disappointments like GPT-5, maybe smart money is starting to look for what's next. And a lot of that money is finding its way into specific areas like Web3 gaming. Just look at Emoca Brand's Tower token. It surged an unbelievable 214% in a single month, growing 8 times faster than Ethereum. This is all driven by hype around new games, and it proves that these focused utility tokens can generate some serious excitement.
So all of this leads to a pretty practical question. If you wanted to work in this industry, where are the real, high-paying jobs? Forget about marketing meme coins. The big salaries are somewhere else entirely.
The real money, the serious money, is flowing into these highly specialized, high-stakes jobs. The top salaries are in things like protocol security, because as the assets get bigger, so does the need to protect them. They're in quantitative trading, where you're building complex algorithms to find tiny little advantages in the market. And they're in surprisingly specific areas, like mining brokerage, where people are making multi-million-dollar deals on computer hardware.
Which leaves us with one last thing to think about. We started this whole journey looking at price charts, but we've ended up talking about careers, digital real estate, and tokenizing the entire real world. So the real question for 2025 isn't where is the price going? It's, are we even watching the right charts anymore?